You mentioned the sort of period of inflation in the 70s that led to skyrocketing interest rates to cool the economy, but triggered a massive recession. I suppose what I'm asking is, talk to me about the debt trap the Fed is in today and why the levers they've pulled on in the past may not work like they used to.
Well, okay. So I think I'm going to have to answer the question in the same way. So what's the playbook from the Federal Reserve? When we have a recession or we have a air pocket in stocks, a temporary freeze of the credit markets, the Fed lowers interest rates to 0%. They engage in ZIRP, zero interest rate policies. They engage in QE. Lately, from this last COVID crisis, we had something called helicopter money, which was basically circumventing the banking system. So using the banking system as a direct conduit to monetize Treasury debt. Yeah, that's wonderful. That works from 1981 to really 2020. The big salient issue with this country was supposedly that we had a problem with deflation. And we were wringing our hands. How do we possibly get inflation going again? How can we possibly get the CPI to be 2%? Because the economy doesn't function normally or function well at all at 1.9% CPI. It's got to be 2, Jay, right? So they end up doing is they circumvented the banking system pretty much and used it as a direct conduit to monetize Treasury debt. We got inflation at 20%. That's what happened. And that's the way they measure it. But I think really the inflation was higher than that. I mean, genuine inflation was, they measured it at 9 something, but genuine inflation was higher than 20% in reality.